Okay guys, good morning. Welcome to the briefing of the 27th of June, just gone 8:30. We'll start over by having a look at the stories of yesterday, what happened overnight, and then go into today and what could happen later on. And then I've got a couple of questions that I'd like to sort of address and go through about the way that I would look at these kind of markets with the trends or lack of trends that perhaps are occurring in some of them. I think looking back at yesterday, there's only one market really to start on, and if I just make it full screen for you, it's got to be oil. Let's get that up, and you can see after the circus of last week. I mean, I was away last week, but I obviously was checking the Twitter feeds a bit like Anthony was, as he does, to see the comments of the build up to the OPEC meeting on the Friday, and you can see after such a sort of sideways range at the beginning of June into a bit of a drop, they obviously wanted to come out with some comments to sort of boost the numbers. And then yesterday as well, if we switch over the transition of this screen, let me just bring this into picture here. This was the sort of the main move that we had in oil here. US pushes allies to cut oil imports from Iran as sanctions loom. So from November to cut imports by zero. And they were even talking about fines for those that do after November. So this really sort of helped push the oil price higher, and you can see really from about, what we say, about 3-4 o'clock. It's really into the end of the session that we really started to get the larger part of this move, pushing through the high of the day, pushing through 69, R1, the highs of the week, Friday sort of closing high as well that we had on the back end of the 22nd. And then we continued to go, and from the lows of yesterday to the highest point, we did over $3. And also, we'll come on to what happened sort of overnight and what could happen today in a bit. But the API figures as well were incredibly bullish. As you can see here, biggest draw since September 2016, minus 9 million, so drawdown of 9 million there. And the reaction, usually API is never going to be the biggest reaction that you see, obviously due to the timing and the importance and that they would place on DOE instead. But just circled here at 9:30, you can see not the smallest reaction. You've definitely seen smaller from an API. Let's be honest here, up 30 cents. But I think if we hadn't already had this big push from, well, if we can say from sort of 68 to 70 and a half, I think that move would have been slightly more large to the upside. This morning, slightly range bound. That high that we made yesterday following the API and obviously these Iran talks has been tested a couple of times. Worth keeping an eye on that going into the morning. I know we've got the DOE to come at 3:30 in the afternoon UK time, so always a tricky one perhaps to look to get in before, but just starting to get squeezed in, and we're only about, well, what we'd hear, about 5-6 cents off the high, so it might well be by the end of this briefing we actually look to have got a push through there. So worth, just while we're on the matter, for those that are looking at it, where the next sort of levels could be, $71 to the upside, and then you're really getting into the sort of the meat of the down move that we had on the back end of May there. As you can see where we really started to come back down. It wouldn't be surprising at all, would it, to be up near that high that we had on the 22nd of May, in the coming sort of days, that yearly high. So keep an eye on oil. Obviously we'll talk about it a bit more into the remainder of the day ahead of the DOE as well. But this was the main sort of move in the markets that we had yesterday. I think caught quite a few people by surprise due to the fact that it was coming to the end of that sort of day, 4:30, 5 o'clock, and really did continue the push here. You can see the main sort of 15-minute period at 4:30 to 4:45, and then R2 had a couple of decent opportunities on that push from there as well, and it has continued to go higher. Yesterday you had the pound as well, which was a half decent opportunity. I'll just bring this into the picture now, and you can see we pushed lower. Really, we found some decent support on what was a support level from the previous day on that Monday. You can see highlighted here on a couple of occasions. First test on that morning yesterday was quite good, and then we had some further push to the downside here. But admittedly, you also had some US dollar strength as well, but incoming Bank of England member Haskell sounding more like a centrist with a hawkish tilt rather than an outright hawk like his predecessor McCafferty. You can see here Anthony Chung tweeting this not long after the reaction that we saw. So slightly dovish in their overall reaction, as you can see, and we pushed down, and it was a quick fire move back down to the S1, which also later on more closer to sort of 1/2 in time, and then offered a good level as a resistance. I mentioned the dollar was relatively strong, and you can see as well euro dollar had that push and technically was great yesterday. And in these kind of markets, and like I said, I'll come on to this to the back end of the briefing, the technical levels can respond quite well. S1, very good support. The pivot then was also really good resistance for that breakthrough, and this morning you can see actually again the pivot working pretty well. Aussie dollar took its time but also did sort of drift down throughout the course of the day as well. We'll come on to the equity market, which I can see you guys are talking about, and I was talking about it just before we got on the briefing, that are feeling very heavy this morning. And yesterday the sort of the trade war talk, if anything, took a sort of a turn for the better. You can see here Donald Trump softens tone on Chinese investments, and yesterday it was a day where equities didn't really do too much. I think on the Monday you had obviously the decent sell-off really coming from that cash open, and I was waiting to see if we had anything like that yesterday, and when we didn't, I thought, well, I think we're going to push a bit higher into the close, and we did. It wasn't to say at all that I was calling a bottom on this move, but the market wasn't really looking to have a 2-day sell-off as such, and we obviously pushed to the upside. But as you can see now, S&P just pushing below the S1. Dow is definitely one I'd keep an eye on here, though. They're already through its S2, not comfortably at all, just sort of sitting on there, but one to sort of be aware of. But with trade war fears sort of yesterday sort of subsiding a bit, it seems to sort of be picking up again, and I think it's also worth noticing. And on my way into work yesterday, there was a bit of talk about the Shanghai comp being in a bear market, so 20% from a previous high, not the all-time high of course, but the high that they made in January, so the most recent high. And it wasn't really getting that much traction. I thought, well, this is something that needs to be taken into account, and it's actually been talked a lot more this morning. On my way into work, I was just checking the sort of the Twitter feeds and what the main broadcasters were talking about, and this was appearing a bit more and more. And also, it was the Dow failed to retake the 200-day moving average. So we have a quick look at that, get that up on the chart as well. You can see here, let me just clear this up for you guys, make it a bit clearer. So the Dow, as mentioned yesterday by Anthony, breaking that 200-day moving average, failing to go above. So you just got negative sentiment coming back into the market today, I'd say, after yesterday where it seemed like, okay, we're just going to chill for a bit and almost go sideways, take a bit of that Monday loss. You're now getting, like I said, the Shanghai comp bear market talk over again. You're getting the 200-day moving average fail to act as a buy opportunity, as it has done for every time it's gone below for the last couple of years. Brexit was a great buy, Trump was a great buy, but now, closed below, we're failing to sort of hold, and 24,000 in the Dow doesn't seem too far away. If we have a look over at the S&P as well, it was let me just change this moving average to 50. You can see quite an interesting opportunity has occurred every time, well, not every time, since sort of April, as below as an area of resistance, or when we do break through as level support. So now we're looking to sort of break down below that as well. I think the telling thing, if we go back to the Dow Jones, and I'll come on to the Nasdaq in a second about the 200-day moving average, is that the Nasdaq is still relatively far away. I think if we were to get down there, the conditions would be a lot different anyway. But to have all three of them, a little bit closer would be quite interesting going into the end of the week and month perhaps. But yeah, yesterday I would say summed up was all about the oil move. We talked about the Bank of England comments as well, a bit of dollar strength in the market. It was interesting as well. I mean, obviously we'll come on to what's happened in equities a bit more, but the dollar yen. If we just put this back onto a chart, sort of looking at the last couple of weeks. If I just draw a line where we're trading now, you can see we're literally where we were on the 7th of the month. So what's that? I mean, 3 weeks ago. If there was a full blown out trade war, would we really see the dollar yen exactly where we were 3 weeks ago? I'm not too sure. I think the yen would be strengthening quite a bit more. Understandably, this morning it is picking up to the downside. The yen strengthening their safe haven sort of flow. I just wonder, is this just more than just trade war stuff? Is it to do with the rate hike scenario? Is it all of that? I know obviously the Shanghai comp is weighing heavily on the trade war stuff, but I just feel if it's a full-blown trade war move, it wouldn't just be purely seen in equities. But yeah, I think if we look at the calendar for today as well, what we could be expecting, to see if these markets move off any news or anything, it is quite quiet. Just having a look here. Let me zoom in for you all. Got a bit of US data to come out in the afternoon, 1:30, but really, nothing that's going to sort of change the course data-wise of these markets that we're looking at, other than oil obviously at 3:30. So that would be an interesting one, considering the biggest draw since 2016 September. It's obviously one to bear in mind. A couple of speakers as well you can see here. You've got Fed's queries on a voter neutral, something just to bear in mind after what we saw with the Bank of England yesterday. So some speakers can come out and sort of move the markets is something I would be focusing on there. But if we just go back to look at the DAX this morning, which really sort of kicked it off following its open, you can see breaking through the S1. I saw Michael, I think, was in there on the break of the S1, and yesterday's low going as well. So the DAX really has been on this down move. If we just bring this chart back into picture, since the 14th, so that was the Thursday, and it was also, funnily enough, the Fed meeting where it was sort of priced in, or starting to be priced in more, that there was going to be 2 rate hikes. So central banks tightening, you're starting to see equities come under a bit more pressure. So I just wonder if it's a bit more about this than the trade war. But equities really are coming under a bit of pressure here. Nasdaq as well, really coming down since last week, breaking through the S1 now. So quite an interesting morning for sure, and it's nice to see a bit of direction again in these markets again after yesterday's sort of choppy conditions. The push higher we had really was very gradual yesterday, and one thing I said I wanted to sort of go over was a question that I was asked. Was wondering if I could get your thoughts in market conditions like this where there isn't clear fundamental technical bias. How do you go about adjusting your trading strategies? Been struggling to form a directional bias on the major FX pairs over the past week or so therefore find it quite difficult to get into positions. For example, with the trade war comments lately, hard to tell if the net outcome will be positive or negative for US dollar. Would you be looking to play the range on these markets, or do you typically stay out of the market until a clear directional bias could be made? And this can apply to any market. I think obviously, in my opinion, and it will vary person to person, of course, the easiest markets for me to trade are when there's a clear trend and I'm looking to follow it, and I've got sort of technical places to get in and all this kind of thing. But when the markets, maybe like yesterday, are sort of a bit choppy, FX pairs definitely last couple of weeks perhaps being a bit directionless. I think it's good to sort of have your view on the market. Well, if we get to here, who's in control? If we do this, what's the market telling me? Trade what you see rather than what you think. So now, looking at what other market we've got here, the Nasdaq, for example, you've got this trade war talk. Maybe it did subside yesterday, but that wouldn't be telling you what the market is thinking here. So I'd be saying, well, look, negative sort of equity feel to the markets at the moment. You've got all you know, the FTSE, which was even holding up a bit when we were going down, is now on its low. So the Dow on the low, S&P, Nasdaq, DAX all on its low. You've got the Shanghai Comp in a bear market as well. Sentiment is to the downside. We've broken through yesterday's low. The sellers are in control. You know, where could be the next point where we perhaps get a bit of reversal to the downside? I'd be looking at this low and the S2, or if we were to, you know, push perhaps to the upside above here, it might be that, well, this is where that move is then over. So it'd be more, I'd be looking at the market to tell me what's sort of going on. Having broken through yesterday's low, or the lows, and that S1, obviously quite an interesting resistance area to perhaps look to go short. Or it might be that I'm you know, feel like this move is done now, and a retracement higher to go short is the better way to look at it. So I wouldn't be, you know, necessarily coming into the market straight with a bias. It'd be more having a look and telling me, well, where would you know, the buyers or sellers really be in control? What's the market telling me that's sort of occurring, if you like? But just having a quick look over before I ramble on completely, you can see equity still pushing to the downside here. I mentioned the FTSE, which was holding off early on, is now pushed to its low and just found a bit of support on the S1, and where we had the lows into the back end of the afternoon as well yesterday. So equity's under pressure. Interestingly, gold is actually finding a bid here, and I mentioned that just because, you know, while it's all been going off of the trade wars, gold has actually been coming under pressure. So nice to see the correlation sort of come back into play, and that sort of risk on, risk off correlation here. T-notes as well was pushing on this morning, and you can see really did push on to make that new high, and the R2, and that's the highest actually we've been T-note price wise since the month. So it's the highest for the month there. So nice to see those correlations working as well. And we mentioned the yen was strengthening, and that's still just sort of pushing to the downside as well. Having a look elsewhere, we'll go just through the currencies to sort of wrap things up in potential opportunities. I think, you know, the direction, or I'm just going to put this on a longer time frame to sort of go over this question again. You can see there is no real direction over the last, I would say, 2-3 weeks. So I'd be looking at this market, lowering the time frame sort of 15 minutes, and say yesterday you had really key resistance here. For me, if we're below that point, the sort of sellers would be in control, the buyers above, and looking at where the targets could be. Does the risk reward make sense? Up to the R1, it's not too bad at all. To the downside, obviously be looking maybe at the lows of the days breaking, and then where could the next target area be? The lower the Monday is quite close, so probably not the best sort of trade to look at in terms of a break of that, unless there was real sort of momentum, or any of these sort of data releases were wildly out of line, which you wouldn't really expect to happen anyway. So euro, you know, while found resistance there, be drawing that analysis up and let the market sort of tell me what's going to happen when we get to certain places. I think if we stay where we are now, I wouldn't really want to be involved. You can see just how choppy this market has got. Probably literally in the middle of the day's range as we look at it from that high to low. The pound, I'd be, you know, bearing in mind any comments. We had the move yesterday following one, so that's something just to bear in mind, as is of course with oil. We had those comments from Iran. Anyone that's been in the markets long enough with oil will certainly know it's, with one comment very quickly can come the opposite and push the market, in this case, all the way back down. But the pound back on here, be interesting to see if we do get any more comments out. But the dollar just strengthening, just pushing actually a bit higher, the dollar index this morning. Let me just move that, having actually pushed lower early on, but breaking through the low of the day there. I think the story here is got to be, you know, focus on the equity markets though, which are still continuing to push lower. I think, you know, bias, if you are after one, is definitely to the downside. I wouldn't be looking to sort of catch the falling knife here. Safe havens pushing high. You've got the Bund on its high. T-notes, keep an eye on that R2 as well. S&P below its 50-day moving average, the Dow below the 200, Shanghai bear market. Sentiment this morning feels a lot more negative than yesterday. So something just to start thinking about there, perhaps as well. Gold pushing on, be keeping an eye on the high of the day, the pivot, as well as potential places to take profit for these markets. But early morning trades suggesting that we're looking for a bit of a continuation of these equity markets to come to the downside. See, a few of you have done quite well this morning, and that's great. If you've hit your targets, like Stephen has said here, fantastic. Why sort of stick around and get involved anymore? But yeah, any questions, of course, about the charts, please do let me know. I'll be posting them throughout the day as usual. But if not, I hope you all have a good trading day and enjoy these market conditions.